Festive greetings to all of you joining in on this program, which is Ask Profit. My name is Alex Mathew. You're, of course, watching NDTV Profit. And if you were hoping for some festive cheer in your portfolio at the start of this week, well, the markets have obliged. And you have the equity markets that are trading at this juncture with gains, and there is a bounce that took place early on in the session. Let's pull up the intraday chart for the Nifty 50. So early on in the session, you had a brief moment where we dipped into the negative territory, but then we have a gain from that point for the benchmark index at least. And you have about 38 odd stocks on the Nifty 50. Last I checked, I'm going to pull that up right now. So 38 stocks continuing to gain ground right now, and quite a few of them on the back of development. So the top gainer, of course, Shriram Finance on the back of earnings. You also have Adani Enterprises, which is gaining nearly 4%. But then you have ICICI Bank, and we'll talk about that in just a bit, 3.5% higher. Mahindra and Mahindra up about 3%. IndusInd Bank, which got a drubbing at the end of last week, is rebounding just a tad bit. Who are underperforming among the benchmark constituents? And you have Coal India, which has disappointed in the second quarter on earnings once again, with a surprise contraction in the margin. Wasn't expected, a decline in the EBITDA, and also a decline in the net profit, which is under a little bit of pressure. Axis Bank, which was doing quite well towards the end of last week, is under pressure today. BEL, as well as Kotak Mahindra Bank and SBI Life also losing ground. Now, the broader markets are not looking as buoyant, but they're still looking good. You have the mid-cap index that's up about 0.8% or thereabouts, lagging behind the benchmark Nifty 50. But you have the small-cap index that's doing quite well. It's up about 1.2%, and as a result of which the market breadth is very firmly tilted in favor of the advances. In terms of the sectors that are doing well, most are actually doing good. And you have the Nifty Bank that is gaining about 1% or so. But really, it's the PSU banking pack that is leading the gains, up as much as 2.9% or so. And you have a few names that stand out here as well. But we are going to be talking about one particular bank at the start, and you've probably guessed what the focus today is going to be. It is, in fact, ICICI Bank, because if you look at the results that have been posted by banks so far, this is a private sector bank that really stands out. And to tell you about which numbers stood out, and there are a whole host of them, Harsh Saita is joining in. Harsh, you've been speaking about this from morning, and I like the term that you used in the morning. This is what investors are getting in terms of what they paid for. It's not a cheap bank, to say the very least, but it's lived up to its rep.
Absolutely, and I don't want to take credit for that because Bernstein actually put that out. And I gave them credit for it in the morning as well. But yeah, I mean, that's exactly what it means. It's the most expensive bank currently, among the larger ones, of course, and doing very well. I did mention during preview on Friday in terms of expectations, if they are able to maintain the 2.4% ROA, I would be very, very impressed. And that's exactly what they've come out with. A 2.4% ROA when you are seeing over the last 3 to 4 quarters deposit growth pressure across the board, and you are seeing a consistent NIM compression, along with in this quarter an asset quality issue starting to get reflected in the system. It's extremely impressive that they've been able to maintain the 2.4% ROA, and that's exactly why the stock trades where it trades, and it's 3.6% higher even today, despite that kind of valuation. What's led to that ROA number is, one, OPEX has been subdued. They've been able to control that. And in a very difficult environment where asset quality is concerned, they've been able to maintain their asset quality, possibly even better it, if that was at all possible in an environment like this. And that's what really helps it stand out. It's a beat across parameters, except maybe if I were to pick something, margins would be something that I may be concerned with. 9 basis point NIM compression sequentially, but they've more than made up for it with the kind of growth number that they've clocked. 4% on advances, 5% on deposits, with LDR compressing. It's a very solid number.
And 4.27%, if I'm not mistaken, that even that NIM is higher compared to peers.
4.35, yes.
4.35%.
It's well above peers, but of course not as much as maybe a Kotak. So,
sure.
So
Fair
that's
point.
how.
Okay, so thanks so much for giving us that context.
Sure.
That helps me line up the conversation at the start of the show today. We've got Lancelot Dicuna, CIO of ValueX Wealth Connect, joining in, as well as Rajesh Palvia, who's the Senior Vice President, Tech and Derivative Research at Axis Securities. Gentlemen, thanks so much for taking the time, and festive greetings to you and your family and your team. Lancelot, I'll come to you first on ICICI Bank. What did you make of the numbers, and do you think the valuations are justified, particularly after a set of results like this?
I think the numbers are very good, and they continue to let's say surprise on the upside. But it's a good surprise compared to a couple of banks who came out with results over the weekend and last week. So I think it is positive, but in terms of valuations, the one thing about quarterly numbers is it makes an investor or extrapolate the same kind of growth and the same kind of numbers going forward. And that is where things can go wrong, or things can change, because the past performance is not necessarily a true indicator of the future, because environment changes, the entire product mix might change. So I think one should be cautious when investing in companies with high valuations, because even if there's a negative quarter or two, the valuations can get re-triggered back to lower multiples, and that could mean significant drop in terms of stocks. It's not that the quality of the asset is bad, but it's just that you're buying it at a elevated valuation, and any change in a quarter or two sometimes can re-rate the stock, and then you could be looking at much maybe even losses if somebody buys at this price.
So is it a hold? So it's a hold basically. It's not a fresh entry.
Yes. It's a hold and not a fresh entry. Definitely, one has to look for a correction to look at making fresh entries, because on the longer term, yes, they are one of the better banks. With HDFC, State Bank, and ICICI are the three really driving both quality as well as growth. So these are the three which one should be invested in.
Let me close the loop and ask you what a good level is then for ICICI Bank. It's at 1300 or thereabouts. What level, according to you, is a good level to accumulate?
Look at around.
First of all, wishing you a very happy Diwali and prosperous New Year to all the NDTV Profit team as well as the viewers of NDTV Profits. Looking at the setup for ICICI Bank, this is the stock where, in this volatile market, stock is holding at 50-day moving average support area. And after today's move, again, stock comfortably holding about 20-day moving average. So the strength is there in the near term as well as on the short-term chart for ICICI Bank. On the downside, 1230, 1240 are the important support area for the stock if you want to buy in the decline. So that's the attractive level for near-term to short-term setup. Your stop loss should be placed at around 1200 if you are buying in the dips. On the higher side, as the stock has already moved up around 1300 level, and if it's continued further, and 1320, 1330 are the immediate supply zone, if it's crosses those levels, then possible really can extend to 1400 level also for ICICI Bank. As market is also showing some bit of recovery, Bank Nifty is also taking the lead in this recovery. So I think ICICI Bank is one component where we can see some strength and possible really can extend in this stock. So trailing stop loss, those who have already bought, can be a strategy at this juncture. Now 1280 should be your stop loss, trailing stop loss for trading position. But for positional investor, wait for dip towards 1230, 1240. That's the attractive level to buy an accumulatory stock.
Okay, all right. So that's a comprehensive view on ICICI Bank. Let's jump straight to the questions. And you see that number that is flashing on your screen right now. That is where you send your questions to us. If you are writing in for the first time, this is a reminder, not a reminder, but this is obviously my first message to you. Do write in with your name as well as your location. It'll help us, and it'll also help you identify when your question is taken. The first one we're taking today is from Srinivas, who's writing in from Bengaluru. He's asking about M&M Finance. And he's also asking about Coal India. So a couple of names here. He's bought M&M Finance at a price of 307 and Coal India at a price of 527. Lancelot, interesting question, right? Because M&M Finance, there have been question marks about asset quality. particularly in the spaces that it operates in. And Coal India has not had the best quarter. The second quarter was quite painful. The numbers were out on Friday. What would you do with these two?
I think as far as M&M Finance is concerned, I think he has bought it at a high price, and given the, concerns that you are seeing in terms of asset quality, especially in the sectors that they are exposed to, more on the industrial side, it is, and, looking at maybe the asset quality could get impacted going further. So one should, look at maybe exiting on a small bounce, because there are far better financial companies to invest in, and valuations of many companies have come down. So I would look at, maybe exiting M&M Finance and maybe look at investing in something like a Bajaj Finance.
Okay.
As far as Coal India is concerned, I think the results for this quarter are pretty difficult for the company, or challenging. And given that the stock had risen considerably, over the last, maybe 18 months or so, I think the valuations still seem to be stretched, and maybe what we are seeing in the quarterly numbers will also translate into the annual numbers. So one should be a little cautious, but you can continue to hold Coal India for the time being, rather than looking to sell in a very negative kind of scenario.
Okay, I'm hoping that you have a view on this. Aptus Value Housing Finance India is the name of the counter. This is a question from Mohit, who's writing in from Ludhiana. The stock is currently trading up about 1% or so, 341. It's a 17,000 crore market cap company. He's looking for a 3-year time horizon, and he's bought at levels of 347, which is very close to where the current market price is. Lancelot, a view?
So I think on the housing finance side, Aptus Value is more looking at the smaller segment of customers. And I think at the end of the day, it's all going to be about how you manage the net interest margins and the NPAs. Now, smaller companies will find it difficult to, to maintain the net interest margins, because the cost of borrowing always is higher than, than bigger companies. Bigger companies can borrow at much lower cost. So I think the challenge is going to be in terms of maintaining the net interest margins and keeping NPAs lower. So from a longer term perspective, if you're looking at a 3-year perspective, I think one should, and if you're not, since you haven't made a loss, or you're not, the purchase price is more or less close to I think it would be better to look at exiting and look for, investing in the stronger companies in the space.
Okay. So that's the view. All right. I must say that we're going to take one question per viewer, so do bear that in mind. If you send us multiple stocks, I'll just have to select one of them. BPCL is the name of the counter that we're taking next, and I'm not sure who's writing this, but the question is about a buy or sell recommendation, what the target would be. Stock is currently trading at 311 or thereabouts. Rajesh, what's the view on the charts?
So structure has turned bearish for the stock, as the stock broken its important support area of 320 in this fall. If it's sustained below to 320, furthermore, follow-up selling we could see in the stock, and on the downside 300 to 90 are the next downside level for the stock in this corrective move. Stock is now trading below all its near-term, short-term moving averages, so that is also adding up some bearishness. Maybe some pullback action we could see in line with the market action. Possible pullback action can come towards 320 around those levels. So if it comes around 320, where one can deploy some short trade if you want to trade in this stock, because our view is slightly bearish for the stock, and possible target we are projecting towards 300. So one can wait for some pullback action. Your stop loss to go short around 325 to 326.
All right. So we're finally today in trade seeing a little bit of an abatement in the selling, but whether or not it's sustainable and whether this truly is a near-term halt in the selling is another question. Of course, it's all stock-specific action, isn't it, Rajesh? The question is, what would you buy at the current level for a period of less than a year, if at all? And this is a question from Guru. I'm sure it'll benefit a lot of people. Rajesh, for you.
Yeah, I think there are a lot of opportunities still. We believe that if anybody wants to buy stocks for 1 year time frame, I think some of the stocks from the pharma space are looking very promising. We believe that Lupin is one stock where we are focusing, and we believe that this stock may continue furthermore upside as overall structure across all time frames is on the bullish side. So for 1 year time frame, Lupin is looking attractive. Buy and accumulate should be your strategy. On the downside, 2020 should be your stop loss, and we are projecting target for Lupin for at least for 1 year time frame. That is around 2500 to 2600. So this stock is looking attractive on the pharma space. Again, Amber Enterprises is also looking promising. That stock can be also looked at for long-term perspective, and we are projecting target towards 6,800 for Amber Enterprises. So any minor dip or corrective move should be used as a buying opportunity in this stock. On the downside, 6,020 should be your stop loss. Buy and accumulate is the strategy for Amber also.
Okay, all right. Amber has seen quite a bit of chop and churn in the recent past. It's up about 2.5% as we speak right now. Atif from New Delhi has got a question on Vedanta, and it's a long-term question. Let's pull up the chart and see where it's currently trading. He's bought at levels of 481. He's bought 10 shares. It's not too far away from the market price right now, 470 or thereabouts. Lancelot, on the fundamentals, there are several questions about the kind of money that has been given away through dividends. What do you make of it? From the perspective of a shareholder, what would you look for when you're investing into Vedanta? Would you hold on to this?
So I think at the moment one should just hold on for a while, because while the past has seen good amount of dividends being paid out, Vedanta is becoming a serious player in the commodity space, especially in cases of iron ore and copper, etc. So one should wait and see, because these particular commodities would actually get repriced, and the industry would see further demand coming up. And since they control a large amount of capacity, they would be beneficiaries of any increase in prices, global prices of these commodities. So one should just wait, and maybe when the commodity prices are peaking, then that would be an opportunity to sell.
All right. Garden Reach Shipbuilders is the name of the counter that Karthikeyan wants to know about. He's writing in from Kerala, and he's wondering whether this is the opportune time to enter into the stock. And so from the perspective of the technicals, Rajesh, what are you seeing with the stock? It's up and about in trade today, over 3%. Would you buy right now?
So Garden Ridge has corrected in last couple of months, and if we analyze on a longer term time frame, stock is holding the strength on the long term chart. But yes, near term, short term structure has turned slightly bearish. But again, looking at the recovery from the important support area of 1500 is important for me. If it continues to hold above 1500, or if we are able to defend this level in this volatile market. So I think some pullback action, yes, possible pullback action towards 1700 to 1750 we can see in near term to short term perspective. So at this level, one can buy with strict stop loss of 1500. That needs to be kept as a stop loss if you are buying at current level.
I'm just checking. Do we have the Nifty next 50 by any chance, if we can pull that up? I'm not sure if we do. But we have a viewer who's asking, Dr. Malhotra, who's asking for whether or not we can pull that up. And that's an interesting question, because often on the mutual fund show, we talk about the idea of investing in index funds, and a lot of people gravitate towards the Nifty 50. But in the large cap space, there is also, of course, the Nifty Next 50, which is basically the next 50 stocks beyond the top 50 in terms of market capitalization. And that's certainly something to look forward to. This year, this is up as much as 31% or thereabouts. So it's certainly something to track. Hopefully that addresses your point that you were raising, Mr. Malhotra. We've got Rajan Iyer, who's a retired banker, who's writing in and asking about Yes Bank. And he's holding at levels of 27, and he's bought as much as 1,000 shares. It's up and about in trade today, but he's at a loss. And I'm just wondering whether, he's wondering whether it's a good idea to hold for the next 2 years. Lancelot, on the fundamentals, what's the view on this one?
So I think on the fundamentals, it still is a bit expensive as compared to the other banks. And yes, the bank had received support from SBI, and there was a turnaround story. But at the same time, capital of the bank had expanded because of conversion of various bond holders and loan holders into equity, which meant that it got recapitalized to that extent. But the return process in terms of generating higher ROA, return on assets, as well as, return on equity is going to take a while. And so I would see that the stock is really going to consolidate for a longer period of time till the earnings start to see a significant improvement. So at this point of time, I think it's better to consider that you are holding an expensively valued stock, and that may continue to remain expensive at least for maybe a year or so. So in the meanwhile, if there is an opportunity, one should look at exiting and moving into much stronger banks, maybe like an HDFC Bank.
And you mentioned those three at the start of the show. Mangesh from Pune is asking about Bharat Dynamics, which he's bought at a price of 1,676. He's currently in a loss. He says his time frame is 2 to 3 years. What can be done here? Rajesh, on the technicals, what strategy would you employ? Could you suggest a stop loss for him? And also, at what level can he consider accumulating? Because it's a sizable loss.
Yeah, so the now stock prices is beyond the stop losses because already he has bought it around 1600. Now stock is putting at 1000 level. So a very significant corrective move in most of the defense stock, and this is the 5th consecutive month where we are seeing that still most of the stocks are still under supply pressure. But if we analyze on the BDL, in this corrective move, stock is now moving towards its important support area on the longer term chart. 980 is the important support area for this correction. If we wish to average out, I think for averaging quantity, I think we can keep a stop loss of 980. That stop loss needs to keep if he is averaging at this level, because if any pullback comes, so I think this average quantity would give some profit on the stocks which he already bought. So acquisition costs will come lower by averaging it out. So 980 should be your stop loss if you are averaging it out here. In pullback, yes, though stock is in oversold trajectory, some pullback action we can see towards 1150 to 1200, where the quantity which you are buying at lower level can book around those levels.
Okay. The next question is from Venkat Ramani, who is writing in from Bengaluru, asking about Nerolac paint and whether or not it can be bought at the current price. The question is to you, Lancelot, because he's essentially asking about festive demand and the real estate space, really, whether or not this particularly building materials company is going to benefit from the demand in the space. What would you say?
The paint industry, we've seen one or two new players get in, the Jindals, then you have Grasim also entering the paint space. So there is going to be competitive intensity going forward. And so I think given that competitive intensity, you will see a redistribution of market share. It will be difficult for many of the paint companies to hold on to their existing market share as well as maintaining margins. So given that scenario, one should look at, maybe reducing exposure to these companies or wait for a real big dip, which may happen only once maybe the year end is over. Because at this point in time, because of festive season, you may see some growth, etc. for the quarter. But when you look at it over a 6-month period, you could see that companies are not able to sustain at the rates of growth that they had in the past. And that would mean re-rating of the stocks on the lower side. So one should look at, maybe exiting at this point in time.
Coming back to you, this is probably the last question we're taking today. It's on IDFC first, but it's a question all the way from Japan. And we've got Nagendra joining in from Tokyo who's asking about this. Would you buy at this point? Lancelot, the numbers just came out and they haven't looked the strongest in the second quarter, at least compared with some of their peers. Would you suggest a fresh entry though?
So I think if you wait for a little bit longer and maybe you get another 5-7% lower, then you could see, probably you're buying it at when the values are at a fairly low option. But at this point in time, given the structural changes that the bank is undergoing, it is getting merged with IDFC. That merger process is getting complete. And we are seeing, there were a certain high cost of borrowings that are getting repaid. So there is a process of, business restructuring that is underway. So I think you may get a chance to buy it at a little lower valuations, because after this business process is over, it will take at least a year before you'll start seeing some improvement in the overall scenario.
Unfortunately, we're completely out of time with that answer, and point well taken on IDFC First Bank. But Lancelot as well as Rajesh, thanks so much as always for taking the time, and wish you again, you and your families, a very, very happy Diwali. That brings us to the end, as I said, of this edition of Ask Profit. Lots more coming up over the course of the day, so do stay tuned. This is NDTV Profit.